following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Hello, back in North Carolina. Thank goodness. That was a heck of a road trip, and thanks for joining us this morning. Got back from Chicago pretty late last night. Spent some great time with Steve Dollop there, my partner up in Chicago. We have some pretty cool products coming out soon, so I just wanted to circle the wagons with him before I got back here. I don't know if you guys travel a lot, but man, whew, can take it out of you for sure. I want to get right into the Greek thing. Obviously, that's kind of the topic here. And Eric Cordy's going to be joining us in a little bit, hopefully to discuss this a little further. But, we've been taking a look at the euro. I've got the euro on our chart right now. And this is kind of what we had thought long-term situation on the euro was going to be, regardless of what happened in Greece, regardless of what happened with the economic numbers in Europe in general, and the German numbers that were coming out that were relatively non-benign, kind of positive, if you will. But we talked about, and this is our weekly situation, we talked about this yesterday, we talked about a unfair low at around 109.48 on the weekly that we had to pay attention to. That would be more than likely some form of a target-rich situation down here. We're sitting right now at 109.32, so we've kind of started. We talked about that wasn't a buy point. We're, without question, more biased towards the negative side on this. There are obviously some last-minute talks going on to try to, have Cyprus and some loan situations that may come, may not come. I really don't think that that's going to rattle what's going on with the euro too much in particular. I mean, remember, this could be some people are saying this could be a domino effect, especially if Greece comes out of this, even if they voted no, they're let's just say they're out of the euro. Let's say that there's no loans coming. Let's say there's a catastrophic meltdown for a while in Greece, which has happened before in that country. And then let's say that Greece actually comes out of this relatively well after, let's just say, a 6-month period, and everybody's gotten on the same page there. That would be relatively detrimental towards the European Union in general. You might have some other countries following suit. But as we look at what the euro is doing right now, we're passing on the 109. And let me just restate those numbers. We're passing on the 109.48, 49 numbers on the buy point on the bottom of the box on our weekly. We try to always keep in mind that weekly takes precedence over daily, over 240 down the line. But right now, we're just going to continue to stay with the same mantra that I had talked about in a Bloomberg brief that we did for Bloomberg back a couple of weeks ago, where we were leveraging off the 114.60, 70, 114.50, 60, 70 area. That really has been a nice little trade. And in my opinion, the long-term situation, if you step back and look at the long-term euro, and I'm going to be adjusting my charts a little bit more on the break. I know we've got a different setup here in North Carolina. I see that the charts are a little compressed, is why I'm saying that. You take a step back and you really notice that most of the noise, most of the intermediate long opportunities that have happened recently in the euro, namely getting above a couple of months ago, back above 110, 111, providing some decent trading opportunities. I'll show you those on the daily. But the long-term situation really, in my opinion, is a little bit of a bounce, a consolidation to actually move lower. And it was a little painful to try to stay in this trade continuously. That's what stops are for. We're going to take a look at our daily and see pretty much precisely where we were told pretty much to call it quits for a while, and there's that 110, 111 area where we breached that area, and we were pretty much in either long contra trade territory or just wait until we get into more weekly powerful inflection points around that 114, 50, 60, 70 at. I think we're going to try to call Eric in just a second. So if we could just call him, that would be probably the best thing to do, Al. So let's take a look at what we're doing on the euro, relative to what's happened at that stage when we were up at the 114.60, 50, 60, 70 area. So we had some trading opportunities again on the short side, getting back below profiles on our daily. And as we had caved in and met some targets again on the daily, we had, had to look at some target-rich environments on the resistance side and then continue to play the game as we know it around these profiles. So that's the situation on the euro. I'm not a big fan of buying the 109.49 right now. I'm just continuing to let this thing fall apart. The 240s look like this. This is what's really, really cool. The 240s usually regulate the trade one way or another, and we're looking at a breach of the bottom of our 240s and the weeklies, and it just, stops now, in my opinion, trailing stops can be oriented back into the 109.49 area up into the 109.80 area. So that kind of DMZ now is your stop above based on your appetite for risk on the euro. Okay, so I see we're having connection issues with Eric, seemingly. Let me see if I can grab him really quick. And I've got him, Al, if you want me to pop him in. All right, let's move away from that. Let's take a look at a couple other things that are being affected by what's going on in Greece, possibly, and obviously Shanghai. If you've been reading the news at all on the Shanghai, and I've talked to quite a few guys back home or back in Hong Kong, there's some scary things going on with that. This is something to pay attention to because, the Chinese stock market now at this stage could spill into the Chinese economy big time. We've got some very rare events going on right now. And one of the things that's going on is a fourth of the companies in the Shanghai 2,800, the 2,800 stocks in the Shanghai and the Shenzhen exchange, a quarter of those stocks have filed for basically a halt of the trading in their stock altogether. I mean, can you imagine that? Can you imagine if 25% of the stocks in the S&P 500 or the New York Stock Exchange asked to be halted? So I think we've got Eric now. Eric, are you with us?
Good morning, John. We're here.
Hey. Great. They say you're having a couple of connection issues, so I don't know if you've got your camera off, but just keep it off until we try to.
I have it off. Yes,
okay,
I do.
Great.
Yeah.
Great. Let's talk. How are you today?
I'm
so mixed up.
I'm good. We had a interesting, 4th of July, beautiful fireworks up in New York, and everybody seems to be immune to the whole world, and this is sort of a vacation period up here. So right. I think, which is in a way a good thing from the market's point of view. I think a lot of people are just shaking their head, not knowing what to look at. China, Australia, Puerto Rico, and of course Greece, so we can chat about some things. You go ahead and
I'd love to ask you some questions on those topics in particular. I talked a little bit about Greece earlier. There's really, it's an economy. I mean, on a relative scale, the state of Wisconsin has an economy as large as basically to the United States as Greece has to the European Union. So, how much of a total impact is it going to be? Obviously, everyone's worried about the contagion factor. The euro's starting to finally kind of get some legs on the downside again, which is nice because that's what we've been calling for since 114.5. Right. That's about almost 500 pips ago. But I think if you want to comment on that, I'd really love for people to hear. But to my opinion, without question, the bigger issue is what's going on in China right now. All of a sudden.
Well, I agree, but let me on Greece. I think contagion is being handled very well by the markets. I think the markets are handling all of that potential very well. It's a major event, even though the economy is not that significant. I think what it is, it's a very dramatic change of what we have known as Europe and the euro in the past decade or so going forward, and I expect the meeting in Brussels today will not accomplish a lot. There's so much to do, but I do think that the potential for better news than worse news is there. I do feel there will be an IOU sort of situation pop up. There could be humanitarian problems because of food and
without
medicine,
question.
And that I think Europe is standing ready to assist in. I think the United States is also ready to assist in any of that. We don't want to have the oldest, the Homer philosophy and all of that. There's a sacredness about Greece that the Greek people certainly feel, and I think the rest of the world, if you take off the nonsense about the pensioners walk out of their jobs too early and all this, I think that there is a certain feeling that we have to stand by a country like Greece somewhat. So I don't think it's going to be the end of the world here with the Greeks going off on their own right now, especially.
I hear what you're saying about just the sheer socio-moralistic holding the olive branch out or just trying to help in a bad situation. But correct me if I'm wrong. Somebody owes you money, you give them new terms to try to help them pay you back, and then they're telling you that they can't agree to those terms, and by the way, you need to help me because my mother's gonna die in the hospital because the electricity's going to get turned off. Wouldn't you generally agree to the terms and just try it for a while?
I think the people have been under a 5-year depression in Greece, and I think when all of this started to come together and there was a vote and they had a say, they realized that I'm sick and tired and I'm not going to take it anymore, because what you're telling me is after 5 years of being in a depression here in this country, regardless of the reasons, John, and we know the reasons are, are they lazy? Are they drinking too much ouzo? Are they hanging on the beach? No. The bottom line was that the creditors set up pretty strict rules for them several years ago. When you remember, we went back and forth with Greece a few times, and they rewrote the issue.
Yeah, Eric, can you hold that thought? We got to go to a break here, and we're going to come right back.
Certainly, John.
Guys, great. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Eric, are you still with us?
Yes, I am, John.
Great. You know what I'm doing right now, just to take a break from discussing the end of the conversation with Greece, I wanted to show the U.S. dollar. I wanted to just kind of bleed in some technicals here. Obviously, this has been just positively reactionary to all the things going on globally. The unrest. People want to flood into the dollar. Not that we don't have $20 trillion worth of debt staring us in the face, which is what 100 and some percent of our GDP. I'm sure somebody.
I'm sure leveraged. It's out of control. You know that. Yeah.
Yeah. They always say, we've got the possibility to work ourselves out of these things. A country like Greece, it's just, there's not a lot of global manufacturing type plants there, if you know what I mean. So 9670 is that peak of distribution on the weekly. Remember, that's kind of the top of the hill, and then you start going down the other side. Those peaks of distribution, point of controls on our maps, and that pretty much coincided with 95. Let me just pull that up again. So 9670 was that top of the mound, if you will, on our weekly, and then we initially had surpassed 95.75, which is that kind of breakout of our profiles on our daily. So we're kind of back in action here on the long side on the dollar. We talked about not falling in love with shorting this thing, Eric. When we started getting back down below 96.5 before, we said let's just sit tight and wait till we get back, start showing some legs above 95.30, 95.75. That was the weekly unfair lows and daily unfair highs, and that just kind of allowed us to have some clear sailing for a change. So that being said, let's go back to Greece for a second. Let you finish what you were talking about. Just trying to give some folks some technicals before the market opens here.
Yeah, I think that just to put it in perspective, I mean, the Great Depression we went through in the, 07, 08, 09, and in that area, that kind of gave birth to this austerity kind of economic expansionary austerity, which became the next game in town. I mean, we've gone through so many games: great moderation, trickle down, efficient market, privatization. But now we're still in this sort of expansionary austerity thing. In the United States, of course, we, as you just said very, very correctly, we are not out of the woods at all. From the point of view of the financial situation, but we're doing much better than everyone else because, thank God, we have this country. We have so many things going. We all know that. The bottom line is with Greece is they're going to have to figure out what the currency is going to be, and they're going to probably end up doing some sort of an IOU thing. The IOU will trade at a big discount to the euro. I'm personally somewhat shocked that Europe has done as well as it's done over the last 20 some.
Eric, I am too. I mean,
it's just amazing, John. The Italians are ready to go the same way. They're all screaming and yelling in Italy. Oh, look at the Greeks. I mean, you've got the Portuguese, there's the Spanish, a part of Spain, Macedonia. I mean, they're all trying to do what they can, and we're going to see that constantly from now on out. But I think with Greece, the big worry, the two worries. One is, what if they do very well leaving the Union? What if all of a sudden something happens that they do very well? That's going to create some more political furor around. Merkel has got a tough job. The Germans got away with quite a bit after the Second World War and forgiveness and a few other things, but they remembered the First World War, which is what caused the Second World War economically. And the Germans are, in a comfortable position. A lot of the creditors that gave out the money that demanded it back, they got the money back into the banks within hours after the money came circulating back. Fortunately, I think most people, the Russians and I think Americans, have gotten a lot of their money out of Greece right now. So I expect the contagion to be handled by the markets as it normally would, which is going to be a little dicey. How does it affect the traders? It's going to be opportunity time. There's going to be some great opportunities. So you're looking around the world.
Here.
This is as good as it gets. I mean, you couldn't ask for more. You could not.
Yeah, really. I mean, that you hit the nail on the head. I mean, these are the kind of days you dream about, and you
absolutely.
As a trader, you don't you don't necessarily want to go to sleep with a ton of things on either. You want to conserve your energy, keep your brain space fresh, and not walk into a day getting crushed and having to work your way out of those types of things. It's better to kind of clear the slate, and at the end of the day, at times like this, and keep your head up. Eric, can you hang around? I want to talk about Shanghai a little bit.
Let's talk about a couple of things. Okay.
Great. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit.
In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Eric Courtney on with us.
Yes.
And again, Eric, I'm ready to get into China.
Good.
That's really helped this Aussie dollar trade on the short side. I want to just kind of get right into that for some folks. We talked about some numbers on the Aussie dollar. I'm showing this on our charts right now. We talked about getting back below, again, 76. We breached that. That was the targets for a while. On the downside, we had leveraged off some higher numbers. And again, this is our weekly. This is the long term on the Aussie dollar. Had a little bit of a disturbance getting back up into that 81, 82 area for a while. That was where we were sitting on the sidelines waiting for some new profiles to appear. And the Aussie dollar, Eric, really, I can't believe I'm saying this, but I don't see any end in sight to this thing. And things on the lows go lower. I mean, you and I talk about that all the time. Things on their highs go higher. But now, not only have they had a kind of a government intervention, little heavy-handed situation on top of it. There's mining issues. Now they've got China staring them in their face. Their biggest customer. What are your thoughts? On China right now?
China has got a lot of repairing to do that I don't know if it will happen. They are a communist country. They've got the best combination between their capitalists and their communists at the same time. I business in China with manufacturing solar-powered golf carts, and the golf carts came and they were busted up. They didn't pack them right, and they had a lot of people back and forth with that for a while, back years ago. And what I found out was that, you go to China and you say, look, I've got this widget here. I want to start manufacturing it in China. Oh, very good. Let me take a look at that widget. And next thing you know, the widget is being built in China and sent around to all the Walmart stores. You don't even know it. I mean, they've been playing this game since the flood. And now they're playing the game with their accounting numbers, and no one trusts those accounting numbers. I mean, people are not trustworthy. So they're going to have to do some hard internal reckoning as to how they're going to regain that trust. I mean, we're not Jack Ma and all the Alibabas and all the. I mean, this is they're part of the world. They're a major part of the world, and we cannot have a major part of the world that we distrust and we can't believe in.
Well, as kind of a sister topic to this, the way people trade over there, it's a little different. It's a very uneducated investor, and they trade price. I mean, if the price is higher, they want to buy it. If the price is lower, they want to sell it. Or if the price is lower, they want to double down. I mean, it really doesn't have the same connotations. Not a lot of planning to it, because that last wave down of the Chinese market coming down, there's a whole new set of younger, hungrier, more aggressive people out there that started seeing some returns, and now they're kind of back in the game. The Chinese government can manipulate quite a few things, and they're trying to put some things in place, obviously, to try to curtail. I mean, but you step back and look at this. Even to date, over the last, and let's just go back to. I hate to say this, but let's go back to November of last year. I mean, doing the math here, I mean, like 2,500 to 3,700. What is that? That's a 50% increase.
Yeah.
In the Shanghai.
Right.
And we're looking at the Shanghai. I think this is the Shanghai 380. I've got it right now. We're looking at a 50% increase in the Chinese stock market in, what is this, the last 9 months?
Yeah.
Or
crazy.
less.
It didn't belong there. We know that now.
Yeah, but I mean, this is all almost a mechanical problem. I mean, okay, the Shanghai's up. I mean, if the S&Ps were up 50% since last November, well, there'd be a party on every corner here, right. and the interest rates would be, without question, jacked up significantly, because that's an overheated situation, and we'd all be talking a lot differently right now. But 50% increase in 9 months, and then it's just the mechanics of the pullback right now. So what they're doing is, in my opinion, I don't think there's drastic issues in the Chinese economy. I just think this is kind of a short-term situation that they're going to have to kind of government intervene a fix here, and they're going to fix it. I mean, they're going to stall some stocks. They're going to force some brokerage firms to buy some instruments, and
they'll be pulling the make like nothing is amiss, comrade. You're going for a ride, to a lot of those people over there that are going to have to straighten out the books. They don't fool around when it comes down to making some changes in the government, and that's one of the powers of that communistic and capitalist combination. I mean, I remember where guys would say, listen, the big job we have in China is to hire people, because they've got millions and millions and millions of farmers looking to come to the cities and work. So the big job that the corporation has in China is not so much to show profits. Yes, they do that, of course, with the markets, etc. But the big job they are given by the party that leads them is to hire. And without the profits, it's getting harder to hire. And if they don't hire, one day they're in the boardroom running a meeting. Next day they're off somewhere. They don't even know where they are. They get taken away. Goodbye. You're not running it anymore. So that's going to be meanwhile the contagion. John. Just getting back for a second, what you've done with the scanner and contagion, the breadth people may not understand truly what breadth is about, and being able to see what's going on in terms of momentum of the markets, prices, all the things that go into breadth, increases, declines, new highs, new lows, all the various put-call ratios. A lot of this all started back when we went from the 1/8 and a quarter to pennies on the prices. Then people said, well, we can't really tell now what's going on between, the first 12.5 cents and eighth, and then going up and up and up. They started really focusing on breadth. And what you've been able to do is start to show where things are, importantly on sectors, and importantly even on country sectors, Forex, commodities, etc., and where the drama of the momentum moves are taking place, where there are new profiles coming in. We're able to now have a sit back and take a look and say, where is a support? Where is a resistance? What's happening? Where are the charts? What's the new profile showing me? And I think that's invaluable for traders in this very volatile period of time. The contagion factor is uncertainty. That's the problem. In Australia this morning, they have a big headline saying that the people are not so trustworthy of their annuitization returns they get in their pension monies anymore. They're starting to question. People are questioning everything right now. They're looking at everything through a magnifying glass, which is good, but it also can get, wear you out. I mean, I listen to the news in the morning, I turn it off. I mean, I have to go to the charts and take a look at what's really happening, because nobody has any idea out there. All the commentators are just using yesterday's notes and trying to figure out what to say. So at least with this service, you have the scanner and all of the other factors in terms of the various market monitoring, and the pulse of the market is very valuable. People should use it really to heart during this period of time.
Yeah, I'm trying to just get in the frame of mind, which has been a little bit difficult for me in general. I'm trying to get in the frame of mind of that stock pickers type attitude that you've been talking about over the past 6 months. And the scanner really helps you identify some things that are doing well, not doing well, things that are confirming okay to be long, confirming okay to be short. Right. And what I want to do is just kind of show folks how that helps me, because I've been a big fan of trading outright futures. I was in Chicago in the Board of Trade for years. We've all ultimately a lot of us kind of migrate to what I would call the crack, and that's the futures are definitely the instruments that move the quickest. They give you the biggest probably bang for your buck in a short amount of time. But in my opinion, I mean, like at this stage, like you talked about, and I'm going to put our scanner up right now. This particular software piece is something that'll just separate, like almost like between the yellows and the whites of an egg and the yolk of an egg. It just kind of distills out for you what's really going on in the index and the internals. So I'm going to go into the S&Ps. We're still breadth negative pretty much across the board. A lot of the instruments haven't opened here. When I say that, this is basically telling us the tone of the market as far as the internals go. And when I come in here, I'm just going to, like Alcoa, this is one that's been on our radar screen, kind of stay away. I'm going to pull up Alcoa. We haven't done any sorts. I'm just kind of perusing through the A's of the S&Ps here, and I'm going to pull up Alcoa. AA, I'm going to pull it up on our charts. And just case in point, like you're talking about, if I can get my... I
think they report tomorrow, too, by the way. They're the first one usually to report.
Let me see what's going on here with my charts. Let me re-log into my my chart system here real quick. Sorry, guys. We're going to get back in there in 2 seconds. Okay, here's Alcoa. This has been one, it's just continually been on the short list as far as the scanner goes because of, 2 reasons. One of them is the tone of the marketplace Nice. Okay, I think we're having some technical issues on my camera here. I apologize, guys. We're going to get the lighting right today. Finally, I'm playing around with it, but I just wanted to show you guys the nice environment of North Carolina out in the country here.
There you go.
Yeah, it's a nice change from being in tall buildings in Hong Kong lately.
Yeah, I imagine.
So Alcoa, there's two reasons it's been on our short list, if you will. One of them is our scanner really puts a lot of long opportunities, really, in my opinion, off the screen because, anything can happen. But if you're going to go long instruments, you really want to have the power of the index itself, hopefully on your side, as that kind of beta component of a lot of stocks in the index itself. It might drag those instruments one way or the other. So we've been breadth mixed up at best for the last couple of months, and pretty much more so on the downside of that breadth net negative profile situation. So that being said, we've been looking for opportunities with stocks that have been showing their hand as weak instruments that hopefully will fall fast if the market starts turning south. Now, Alcoa, it hasn't, this has been a $15, $17, a $16, a $15, $14, $13, $12. Now it's $11 stock. I mean, most people wouldn't have believed this. This is Alcoa. This is, a stock that has, is it going to get cut in half from where it was? I mean, who would have thought that? But
yeah.
But, we talked about, is it okay to short cheap stocks? I mean, we said, what, its profiles are predicating this way. The scanner's picking it out. I just showed it. I didn't even plan for this conversation, but it's just showing right across the board. Here's our landscape view. We're below profiles on all time frames pretty much again. And this is one that, the market keeps heading south. You'll get the help of the marketplace and what do you do with it now? We're down in a hole here, but we've had, no new profiles appear down here at all on any time frame that we look at, and therefore, it's stay with the short. So the scanner helps with that process, Eric, and thanks for bringing that up. Actually,
no, it's very important. I mean, people, if they, it's like anything else. People start getting used to how to use it and how to read it. It's your scanner is becoming the slide ruler of the market right now. You can keep it in your back pocket and get a quick number out of it, and that's important. In the morning, you can look at the screen and know what's going on. You're the smartest guy on the block in 20 minutes.
Yeah, really,
you really are. I mean, instead of having to go to all these other charts and the various things you have. This gives you a big picture, and I think then you can drill down and get the real pulse as where you want to,
Yes, we got about 10 seconds for the last break here. I really appreciate you coming on today. I'm sure we'll be talking later about a couple of things we need to cover.
John.
So, but yeah, thanks for coming on, and we'll talk later.
Talk to you later. Bye-bye.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Thanks, Eric, for coming on. We've pretty much spent the entire hour, jawboning about some of the global issues and kind of the fundamentals around those. I'd like to get right back into the charts in the last 4 or 5 minutes here, just to kind of talk about this. S&Ps, we were talking, in fact, yesterday about trying to leverage off 2060 into this 2066 area. Let me try to restart the chart here. We back? Got our chart? Yes, no? Yeah. Okay, so we got our chart back. Okay, so we were talking about yesterday morning, I was in Chicago, and we were talking about, let the market come to you. We talked about, this 2060, 2066. And we talked about, if stops had to be hit on that, we need to be prepared to get back in the game on the short side. I'm a big fan of continuing. This is looking at our S&Ps, continuing to look at our breadth situation here. Obviously, we're going to open up some more instruments soon, and these breadth numbers might change a little bit. But I'm a big fan of continuing to look at this in that DMZ on the short side, and this market continuing to head south right now. Now, ultimately, the next level up, and Tom and I had been talking about this the other day, this 75, 76, 78 general area up there, which was, the POCs of the daily combined with that big POC of the weekly here right there. That area was hit a little bit higher, backed off. But again, I think the safer play more than likely is to allow the S&Ps to just continue to get back down these, below 60, 66, and then start hitting the short gas pedal again on that particular scene. We looked at the Aussie dollar, we looked at the euro, we looked at the U.S. dollar earlier. Let's just kind of look at the notes and bonds. A lot of people have, been kind of chiming in on the TV and everywhere else. Bill Gross in particular. We're going into a higher rate environment. I mean, step back and look at this, folks. I mean, we are probably less than 3 handles off of these recent highs, period, in the 10-year of pretty much all-time low rates here. I mean, take it for what it's worth. We have gotten up into some inflection points, 127, 11, 12 here on the 10-year, but this is, again, I think, this possibly may be predicating some kind of market pullback and some economic misgivings here that may happen. So, just be prepared. Again, this is the 10-year. We talked about trying to leverage off 125.24 and passing on the shorts. This is seemingly been a good little situation. We've got some targets, 127.11 we've got to deal with, but any weekly closes above 127.11, I think you're going to have to take a look at that on the September 10-year contract as support for this thing to possibly move higher. Yellen is not going to raise rates with all these kind of unknowns going on right now. Let's take a look at gold. We talked about this particular instrument showing its hand. The short side being below 1170 on this instrument. Still feel okay about that. Stops above 1170. And that's just the way the ball bounces with gold right now. We're going to take a look at crude really, really quick. We talked about the breach that happened below the 57.77 area. That was kind of Custer's last stance on the trade the range situation. Now what do you do with this down here? There's nothing on the daily. There's no new profiles appearing on the weekly. The only thing you got to pretty much, hang your hat on right now is new 240 profiles appearing. That hasn't happened. And this profile appearing above price action on the short side, above price action, was definitely bearish. And there's really nothing that's going to turn this thing around right now. Stay tuned for Larry Pezzavento. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.